Good morning. It is Wednesday, hump day, April 3rd. I'm packing, so I'm getting ready to go. I didn't go live. I'm just doing this kind of on the whim. So Qs, I pointed this out yesterday. I thought these were support levels. They are support levels. We closed yesterday on the Qs at 441. So you see we dipped down there below there during the afternoon. Used it as a little bit of a resistance. I still think we go into this this kind of range here on the Qs. Now, biggest movers of the day, I said yesterday, eggs, big. I've been eating more eggs, up surge more from 4%. Cal-Maine Foods, they cut their prices, but the volume was huge. Vanda Pharmaceuticals, Dave & Buster's rose 6% after the company renewed its commitment. That was after earnings. Intel lost 4% after they announced that their foundry business in 2023 had a $7 billion loss. They expect 2024 to be the biggest. I didn't think it would drop that much, but it did. Let's talk about Tesla, because Tesla dropped yesterday after the horrible deliveries. It traded actually really, really well. I mean, I was shocked at how well it traded. If margins are to disappoint again, my guess, and this is just a guess, again, you look at this back in 2023. This was a $100 level, and the close was $113. I think you test that back if we get into earnings and margin are a question and they continue not to give guidance. Gene Munster, I think, said it best. Later this year will be a time to get into the stock because March 2025 deliveries will be so incredibly low to beat. Again, next year at this time, if they're delivering 500,000 vehicles in the quarter, like they probably expect to, then this is a whole nother stock. So, overall, I do think the stock goes lower. I think my guess is that margins go here. With the next earnings, I think we get down there. I'm not buying it. TSLQ, obviously the play, still has strong momentum here. In the 4-hour, you just got a buy here at 46.35, and you're trading at, it looks like, $40.35. You're trading at $40.37. So, deliveries, just horrible. Meanwhile, Toyota killed it on deliveries, but they got killed as well. Algorithm got you out with a 1% loss. You had that nice little gain. If you stayed in there, shame on you. But if you didn't, whatever. Here's a good article. Built for the AI era, hopes to achieve break-even margins in 2030. I still say I think Intel is a good opportunity to get into. I just, again, the message is, hey, we're bringing back chip manufacturing onshore. And Intel is one of the leaders in that. I don't think it's a short-term play. I do think it's a long-term play here in pre-market. We're at $43.95. You dipped all the way down yesterday to $40. So I do think you're playing with this 200-day. I think if you buy it under the 200-day, I think you're perfectly fine. Again, remember, that's the 200-day on the weekly that you're looking at. So you really want to put this one in for the long haul, I do think. On semiconductor, they said it received an unsolicited mini tender offer. Shares of the common stock at $70.75, which is 4% lower than the 74. That means On Semiconductor actually has a support level at $70. Well, where are you trading? At $70. So if you have a support level of $70 because you have a tender offer, then anything below that is probably a buy. So again, you've got a huge opportunity on this one to maybe try and get in that. Understand the business that they put in, that they are in. So don't just jump into the stock. Do your research. Understand exactly who they are, where they're going. It's ranked 38 out of 65 here on Seeking Alpha. You can see Taiwan Semi is the number 1, AMD is the number 2, NVIDIA is the number 8. And this is in semiconductor stocks. So you may want to take a look at that one. Marvell, we'll have that one later. I've been a big fan of Apple. Apple's latest research suggests Test Giant will be an AI winner. Will they win on AI? If they do win on AI, you can expect this one to come back really, really heavy. I still say this is a $200 stock at some point in time this year. You can see from the weekly chart, we've just broken down. There is no support level here. Again, I think in my mind, this is a good one to hold on to. I'm holding it. I'm getting sick of it, but I'm not selling it either. The algorithm, the 4-hour algorithm makes you 18% over 2 years. Over 2 years, if you bought and held, you've lost 1.9%. So you're not in as far as the algorithm goes. You're still out. But again, it just takes a little bit. It's oversold. This may be one that you want to look at getting into in the 160s. Later this year, it might be 200. I like this list. Buy versus sell. Paired with each sector, you can see like in energy, they say buy Diamondback, sell Chevron. In materials, they say buy Steel Dynamics, sell Air Products and Chemicals. I like this kind of list that typically Seeking Alpha posts this thing. It's on Oppenheimer, regularly does it, I think once per month at the beginning of the month. And they look at each sector and Seeking Alpha posts it. For those of you that have Trendspider, here is a great scan. You can import this scan. This is the same way you import my 4-hour algorithm. You simply click on this and it takes you to a link and you can sign in and import. Sign up and import, log in and import. If you do decide to sign up, remember you're going to need to use my link right here in Linktree to sign up. Let's see, is the offer still good? I didn't update this. The offer is $892 for 1 year. Again, if that's 50% off. So if you sign up for 1 year, $892, and you look at this scan, if we want to look at this, I can subscribe to it, and then we can go into this, and it'll say I subscribe to it. Click here to open it. We open it back up. And it will scan for you. Let's see, scan through. Here's all the ones. S&P index, all the ones that have pulled back. So you can trade any one of these. You can look at those. I need to put this back, claim it back. We're going to go. This is what happens when you log in at more than one area. And we're going to go back to the 4-hour algorithm. That's the 50 SMA bounce that it got. Okay, sorry, I'm setting up my screen again. And we'll go back to, you can just look at it, choose a scanner. And these are all my scanners. You can look at all those scanners to see exactly where you're at. But I typically leave this on my core investment group in this workspace. So you can import that from Trendspider. I'll include that in the newsletter. The newsletter is free, by the way, 100% free. You can sign up for it at dailystockpick.substack.com. It is 100% free. Why did GE Aerospace, why did it sink yesterday? It's because you got another stock. You look in your portfolio and you got GEV. I mean, that's essentially why it went down. Remember, they pushed out GE Healthcare as well. So now you have 3 companies. They've been very clear about what they're doing it. This is a great article, Viking Therapeutics Future Weight Loss Heavyweight. This is a great analysis, again, included with Seeking Alpha. If you're interested in Seeking Alpha, you can sign up on my Linktree right here, get Seeking Alpha, $50 off. You get $50 off. I don't know, is the spring? Yeah, spring special is still on. So you get 25% off your yearly subscription. But Viking Therapeutics, we've talked about it before. This is a 100% AI. And again, Viking Therapeutics, strong buy on the quant. It's ranked number 3 out of 508. Let's see what number 1 is. Jenks Therapeutics, CATX is the number. They're all 4.98 and 4.97. So I like that one. I like it a lot. The Oracle CEO, the Oracle CEO sold $346 million. This is another benefit of Trendspider that I don't go into a lot. I typically use FinViz for all of my insider information stuff, but they outline it really well. You can see Oracle, even though this dude has been selling a ton, algorithm just got you out with an 11% gain. Again, it has started to cover this gap. You don't have confirmation. I'd wait for it. You have a dividend coming up. It's not that big of a deal. Taryn Barnes from Spotify, looking to diversify my portfolio. What do you think of WS for gaining exposure to basic materials, metal, and mining? What is WS? Worthington Steel. I think that was the one that Oppenheimer just said, hey, get into. Let's see, Worthington Steel. Algorithm has you in. Looks like a very good earnings. Popped up. It came back. You don't really have confirmation. Looks like it's a newer company. So I don't have a lot of information on it. Let's look at the 4-hour algorithm real quick. It makes you 4.3% versus gaining 36%, just over 4 months. So it's 4 months old. I typically don't like that type of thing. You don't have any earnings information. If we go to Seeking Alpha and we look at it, I don't know if it's covered. Worthington Steel, not covered. So I don't think it's bad. I don't think it's good. It's too new. I mean, so Taryn, they don't cover it in any stuff. I don't see anything that tells me, hey, it's great. January of 2024, when they IPO'd, it looks like a director bought $51,000 worth. That's not like unbelievably, oh my God, that's bullish. But algorithm has you in. Again, it doesn't do as well as buying and holding. I don't know too much information about it, though. Nick WP, Argan, AGX. AGX. Let's look at AGX. I don't even know what these guys do. Let's look at the chart. The algorithm loses you 11%. Buying and holding makes you 23%. 27 positions. It's in this current run. The run is over, to say the least. It looks like you've got pretty decent downside on that one that's coming up. So if you're in it, I don't know that I'd stay in it unless you absolutely 100% believe in it. Looks like the top here is 55. So if we AGX, let's see. AGX, they're in engineering and construction. They're in industrial. I mean, that's been an industry that's just crazy good. Construction company. I mean, let's look at AGX. Does Seeking Alpha cover this? Argon. It looks like it's a hold in the quant based on its growth. Growth is a D. You look at their diluted growth. I mean, it just looks like they're year over year growth 14%. But then you look at their forward growth and they're it's the comparables. You had a really good, if you look at the stock price on a weekly, you go back, I mean, you're going to announce, looks like April 15th. So you go back to April 15th of last year. That was when you really started to pop. So you really started to go up here. So you've got comparables where last year in April, you were trading at about $40. Today you're at $49. You better have growth to confirm that. So that's where you get in trouble. So Nick, I know nothing about it, but I think that's be the one. Freeport McNamara, Nilesh. Freeport, this is all about China opening. Materials has been on fire. I mean, look at that, March 6th. The algorithm makes you 6.8% versus losing 3.5% over 24 months, 34 positions. This one has been super volatile. That has not been a great stock to trade. And the reason, look at that range. I mean, you're getting into the absolute top of that range. Look at the bottom right here at about 33, 34. And then you look at the top of this range and you're right at it at 48. Your all-time high is 51. So FCX, I do think that they have the ability to grow bigger. It's a $69 billion company. 38 PE, 22 forward. So let's see, FCX. Let's go over to the right here. It is a hold in the quant, and it doesn't have great stuff. It's ranked 5 out of 7. Number 1 is Tiesco Mines Limited, TGB. So, Nilesh, I would look at TGB. Hey, Gary, you mentioned some time ago, this is Scott from Facebook, that you got ODFL for your dad, another freight company that has done even better. SAIA. SAIA. This is Saya Inc. Strong buy. Quant. Number 1 out of 20. Yeah. I mean, God. This is ground transportation, it looks like. NASDAQ. Number 1. God, this is a good one. Look at the seasonality, too. Look at July. Look at the seasonality of July in this one. Wow. That is great. April, good month for it. You know, again, Seeking Alpha operates transport company, and that's a great suggestion, Scott. I may look at this one. SAIA. That one has been running, though. Let's look at the algorithm on this one. Algorithm got you in. It has you out. So this may be a buying opportunity when you get back in. If we look at the weekly on this one, it has been a roaring success. Huge upside right there. If you were to buy during the February, anytime in 2023, to be honest. The October lows had you at 370. You've almost doubled your money there. Great stock. Hayden Passmore, BRKB. Is it a good option with these higher for longer rates? Yes. What you have to understand is Warren Buffett is old. Charlie Munger just died. This one probably is run really well without those two. But when Warren Buffett actually does pass away, this stock will take a hit. It absolutely will take a hit. The question is, how does it continue? And does he leave a legacy? He's still sharp. I mean, that's what you have to worry about with this one. That's the only thing you have to worry about with this one. Because as far as like a stock goes, absolutely. I mean, look at that all-time high. We passed it, and we've just continued to go up. They're doing things right. So I don't know that there's a higher for longer with this one. But if you're going to buy an ETF, think of this as an ETF. You're just getting all those sea candy, all of those companies that they own and run, and they do really well. And Oxy, he's been smart with Oxy. Look, everybody was making fun of him for buying Oxy in the 50s last year because it was a dead weight. Look at this, the transformation out of the doldrums. So he knows something. You just got to, Hayden, I would say, I don't think it's a play on higher for longer. There was a discussion yesterday I heard about higher for longer being beneficial to the Great Eight because they make so much money. In a downturn, there's no place to hide. That's kind of the thing, is there's really no place to hide in a true downturn. I don't think we have a downturn in our miss. I pointed out on QQQ how I think we have a trading range. And as you get into this range, trade, buy things. That's what you want to do, is you want to buy things. When it feels uncomfortable, you want to buy things. Alex Ultra, what's your take on GLOB? And GitLab, GLOB, Globant, doesn't look strong. That doesn't look strong right now. So, it doesn't look strong overall. GLOB, let's see, GLOB. What does Seeking Alpha think of GLOB? Hold. It's an information technology. The PE, forward PE is, look at this valuation. Are they growing a lot? PEG, the forward PEG, not bad. If you want to buy into this one, great. The other one, GitLab. GitLab is what he asked. GitLab is one that, the valuation, absolute F. This one is a mess as far as valuation goes. But you can't argue with the chart. The chart and the valuation are two different things. Chart looks ugly. Chart looks ugly. Valuation looks ugly. You had this huge thing. Is this the one that does space stuff? Let me see. Summary. Develop software for free software cycle Europe, and it offers developers with single application faster. Yeah, I don't know too much about this one. It's a small cap company. I do know that. I think Shay likes this one. But look at the forward PE. I mean, they're losing $424 million. Do you want to buy into this? I don't know that I want to buy into a falling knife. So they're my biggest tech plays for this year besides Marvel and AMD. Stick with Marvel and AMD. I mean, GitLab and Glob, I don't know them. I don't care to know them, but I do know Marvell and AMD. Marvell's killing it, I think, if I'm right. They've bounced up. Yeah. Look at that. I mean, from 65 to 73. In the short term, this one looks far better than those other two. Far better than those other two. And you still have room to go. And you know, you're in the semiconductor space. AMD will be fine. They are number 2 to NVIDIA. This one will be perfectly fine. It's had a little pullback. The valuation is a little bit crazy. It will be absolutely fine. The buy here at 180. Look at where the MACD is. Do you think you're going down? We're going to see another cycle. So another cycle of inventory stuff. If you have any questions, you can hit me up on I'm traveling today. That's why I'm being so quick, by the way. So here is the link tree. Remember, Trendspider offer. The newsletter, absolutely free. You have a spring special on Seeking Alpha Premium. Alpha Picks, best portfolio out there. We just got the new one. This one, beats the S&P 133% versus 36%. I did want to point out, if you've made it this far, I did want to point out something that I said yesterday while I didn't have the recording going on for the actual podcast. And this is in Savvy Trader, and this is the core portfolio. This is 100% free to follow. And what I do is I typically just buy, when I add something to the core portfolio, I buy 100 shares. And when I take it out of the core portfolio, I sell 100 shares. So this isn't a trading platform. It's just your pick of 35 positions that I believe you can get into and in the long term completely make money. I wanted to show this because I bought Tesla and XLY on the same day. The reason, and I've said this before, Tesla was a large percentage of XLY when I bought it. And I didn't want exposure to Tesla because I just didn't feel like there was a good forward plan. Full Self-Driving was a bit of a mess. He was making a bit of a mess with Twitter. Their conference call back in January was an absolute disaster, so I just didn't want it. But I've held XLY through this. I wanted to point out for the long-term investor where actual volatility might be an issue and you might feel it. Look at this. On June 20th, 2023, I bought 100 shares of XLY. As of today, I'm up 7.82% in that. Okay, that's July of last year. At the same time, remember, I'm up 7.82. At the same time, and the same day, on June 20th, I bought 100 shares of Tesla. Again, that one is down 38%. So XLY, I made 7.82%. Tesla, I made 38%. There's 2 points here. One is if you can't stand the volatility, ETFs are a great way to get exposure to names without the volatility. Because as much as you want to believe the upside, there is downside in the market, and it can come at you quickly. And Tesla is one where it comes at you quickly. So that's the first thing. The second thing that I want to point out to you is you don't need to hit home runs. You can hit singles, rather than hitting a home run with Tesla, you can hit singles with XLY. Find an ETF that fits you. But I pointed this out yesterday, and it was after the recording, but I did want to point this out again. Exposure in ETFs is something that you want to actually do. So let's take a look at some scans. I will include these in the newsletter, again, for free. We got Qualcomm, Taiwan Semiconductor, MPC, ANF, which is Abercrombie & Fitch, and ACN. Energy Transfer, ET, and FANG are the two. Then you've got a bunch of levered ETFs that got cross-ups here. TSLQ, SRTY, TSDD, HIBS. You've got DRV, TSLS. You've got a bunch of stuff here. That TSLQ, look, you got a MACD cross-up right there, and you got an RSI of 61. I don't think this one's, Tesla is done going down. I think Tesla is going to continue to go down. Like I said, if we get a meaningful reduction in margins because they reduce the price of their cars that much, you're going to see that $100 price level come back into play. Okay. Take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.